Hi, welcome back to our YouTube channel. My name is Ting Ting. Now today we are going to cover a topic that is very different. Why it's so different? Let me explain to you in a short while. So the topic of today's session is why retail traders should think twice about full-time trading. And for this particular topic, just for information, I'm going to go against the norm, which normally people would encourage you to become a full-time traders. But I'm going to go against this direction, which I'm going to strongly encourage you why you should not become a full-time traders. Yes, you did not read it wrongly. I'm going to encourage you, you should not go towards the direction to become a full-time traders. Later, I'm going to explain to you why I have these particular statements itself. Now, before that, as usual, if this is your first visit, please remember to subscribe to our YouTube channels and on your notification bell. Now, my name is Ting Ting. Let's start with our topic for today. But before we start, as usual, I'm going to cover a disclaimer. Our topic for today is only meant for education purposes. There's no buy or sell call. Now, before we continue, let me define two keywords for this particular title. At least we are in the correct channels, we are in the correct direction, because sometimes our interpretation differs. Then whatever follow through, you might have some misinterpretation. So I'm going to explain or define two very important keywords. The first keyword is retail traders. So what is the definition of retail traders? Retail traders meaning that you are using your own money to trade. You don't use other people's money, you don't use other funds, for example, funds money to trade. You purely use your own money to trade. This we categorize as retail traders. That's why our topic is why retail traders should think twice about full-time trading. It's very much different because if you're different type of traders, like for example, if you're an institutional client, traders, or you're under funds, or you're being hired as a full-time traders, you don't fall under these categories. So these categories, we are going to focus in terms of those who are retail traders. Why you should think twice before you are going to convert to become a full-time traders. Now, second part is the term full-time trading. Many of us, when we have this misinterpretation about full-time trading. Now, some of you might be trading for one contract per day, or one contract you're holding for a longer term, or you bought a stocks, then you're holding for a longer term perspective. Is this categorized as full-time trading or not? So many of us, we have many of the misperception about this, but let me explain to you two key definitions about full-time trading. How do you qualify as a full-time trading? Now, first, your source of income mainly should be coming from trading. Your source of income mainly should be coming from trading. Then only you can be categorized under full-time trading. This is the first criteria. Second, majority of your time you are putting in terms of trading, meaning that whatever you do, it can be you are trading about half an hour per day. It's okay. But the rest of the time, you're still allocating for your trading related methods. For example, you're perfecting your trading strategies, you're doing your analysis, etc. Or you're building your system related to trading. Meaning that for one particular day, you allocated, let's say for example 7 or 8 hours or majority of your time in terms of trading, then only we categorize as full-time trading. Please get these two definitions correct before you continue. Now, the next thing I'm going to highlight is what is the reality of full-time trading. In a way, meaning that many of us misunderstand about the terms full-time. We have some misconception about this full-time trading itself. But in terms of whatever we understand and the reality, there's a big gaps. Let me explain to you. Actually, for this reality, what are the reality? We can have about 15 of it or more than 10 easily to categorize it. But because of time restriction, I'm not going to cover all. I'm going to pick up three main. misperception about full-time trading itself and what is the reality. So we are going to talk about the reality itself. Now, the first one is about unpredictability of income. I'm going to explain to you in a short while. Second is high frequency doesn't mean that you are having a high profit. Why? Later I'm going to explain to you. And the last one is about small capital challenges. Now, this third reality is the most important reality because many of the retail traders never aware about this particular segment. I'm going to explain to you in a short while. Let's start with the first one about the reality of unpredictability of income. Now, first thing, we need to understand in terms of trading, there is no such thing as consistent monthly return. Unlike your job, every month definitely you will get a stable salary. But when it comes to trading, there's no such thing as stable salary. Meaning what? You cannot have every month you have a very consistent or stable salary. This month I'll get profit from the market 4,000, next month 4,000, subsequent month 5,000, etc. No, you can't do that. No one can do that. There's a reason very simple for you to understand is why funds, they only collect management fees rather than a profit sharing. They're doing management fees rather than profit sharing because no one can guarantee all the funds can perform every month or every year. Not easy for that because we need to understand the second perception is we depends on the market performance, not us, that we can determine. If we go for a job, yes, the job will definitely pay us a salary. That's the nature of it. But when it comes to the market, we rely on the market performance. But sometimes, the economic cycles is not good. The general market macroeconomic is not good. How are you going to confirm that your salary, so-called salary, can be stable? Especially when it comes to generating consistent return in market. Because remember, market performance is not something that we can control. So this is the first thing. There's no predictable income. And the next question that you should ask yourself, let's say for example, 4 months consecutively, you're suffering losses in the market. Can you survive or not? That's the question you need to ask yourself. Because sometimes it might be during the whole year, first 4 months you're suffering losses, subsequent 8 months you're generating profit, which contributed to you per year on average maybe 10% of return. But first 4 months consecutively you are suffering losses. Are you able to continue with your basic living or not? This is the first reality. Sometimes, remember one thing is many of us, we want to become professional full-time traders, or another word is full-time traders is we have the misconception that maybe become full-time traders, everything is stable and we can be overnight become very rich. This comes to the reality number 2. High frequency doesn't equals to high profit. Now, we need to understand one thing is high frequency meaning that you trade more. Many of us have a very wrong perception about high frequency, meaning the more you trade, the more hard work you put in, it will equals to results. But in fact, in reality, hard work when it comes to market doesn't equals to results. I'll give you a very simple example. Today, if I have many part-time jobs, definitely my salary will increase. The more part-time job I add in, my salary would definitely increase. But when it comes to trading, no. It doesn't mean that your hard work, you really concentrate. Many of us, we try to resign, then put the whole effort into trading. We thought that when we focus, we will generate the results that we want. But these two is not equals. In reality, high frequency doesn't equals to high profit. Doesn't mean that you need to trade more to generate more profit. In fact, you know that some of them, they might be trading 100 lots. The profit that they generated might be less than those who are trading 1 lot. Maybe those who are trading 100 lots, they generated 0 profit, but those who are trading 1 lots, they are generating very good return. So high frequency doesn't equals to high profit. Hard work doesn't equals to results or performance. Please bear in mind. Now, when it comes to high frequency, the scariest part is you might become over trading. And don't forget, over trading is equivalent to high cost. And some of them, especially many of the full-time traders, after one day of effort being put in, they are so, what we call it as, so disappointed or so sad, because you notice that you make a marginal profit, but this marginal profit, after deducted your commission or the cost, you are doing nothing, you're not making anything. So your whole day of effort just gone, just went into the drain. And remember, over trading is also will increase your risk itself. So this is the reality, very important reality, which many of us, when we want to become a full-time traders, we have misconception about this, but in reality, we need to understand this is the reality. Now, the third one is the most important part, which is the small capital challenges. Now, let me ask you a question. Give it a thought. If today you are going to start to become a full-time traders, how much you are going to start as your initial capital? Give it a thought about it. Now, why I need to bring this up is because one of the point very important. Let me illustrate this through an example. Now, in case to ease my calculation, I'm going to give you a more positive scenarios. First thing, let's say you're going to start with a capital of 1 million, but I can easily tell you many of the accounts you are not able to do that. I'm not saying that this is your asset. If your asset is 1 million, impossible you're going to put whole sum of 1 million into your trading. Am I correct? Definitely you're not going to put that. But this is only purely for your investment, the capital to start your investment. Now, I give you a statistics. Last time when I worked in an investment bank, those accounts, more than 95% of the accounts, they are below 5 figures, meaning what? Below 10,000. Majority of the trading accounts normally is around 4 figures only. The remaining 5% will be majority fall under 5 figures. 6 figures already minority. Even worse, if you're going to look at 7 or 8 figures, that is relatively small. I would say easily less than 0.5%. Not even below 1%, should be below 0.5%. So from that perspective, I'm going to give you a very positive figures to start. Let's say you're going to start with 1 million. If I'm going to give you every year, so you're very lucky you manage to get a 10% return. You beat the market. Consistently every year you're generating 10%, which is equivalent to per year you're having 100,000 return. Now, if you take this divided by 12 months, because per year we are going to have 12 months, so meaning that average monthly return is about 9,000. That is good. Some of you, maybe if you're working, your salary is about 5,000 or 2,000. This 9,000 is very good. But the next question that you need to ask is, then what? From 9,000, how can I increase to 15,000? How can I increase to 20,000? How much of capital I need so that I can increase to 20,000 or 30,000? Then you will know that that kind of capital is not easy as a full-time traders. It's hard for you to scale. My question is not that if your target is to just to profit 9,000, then no issue. But if your profit is to scale it, your target is to scale your profit, your money return, or in a way your money salary, how can you do that? Very hard, right? Because of your capital, your restriction, your limitation in terms of your initial capital that you can start with. That's why the question is how to scale. If you are going to settle down with 9,000, 10,000, then okay. If you requested more, if you want to generate to 20,000, 30,000, 50,000, how are you going to do that? Ask yourself this question. So we need to understand the reality and also the reality and whatever we're expecting, that is the gap. Try to understand and close the gap before you start to become a full-time trader. That's why my statement for today, this particular topic, says I'm going to go against the norm. I discourage you to become a full-time trader, but I'm going to give you some alternative path. Now, what are the alternative paths for retail traders? Ask yourself, why today you need to become a full-time traders? Is your understanding correct or not? Why full-time traders? Is it like just now what I mentioned about it, the reality and what you expect? There's a gap. Do you really understand this gap itself? And is there any other ways? All of us, we want to become full-time traders. We want to accumulate wealth. Am I correct? Is there any other alternative rather than to become a full-time trader or not? I'm going to disclose this alternative for you. First thing, you do it as your part-time. Why you need to do it as your full-time? You can continue to have your full-time job, and once you generate your salary or so-called income via your full-time job, you take the money and put into your trading, grow it. It doesn't mean that you need to be full-time. And in fact, this will be the fastest way, because your job, your salary is fixed and this income is consistent. You take the money and put it into your full-time job, into your this part-time source of income. Meaning you take your full-time job, let's say you are an engineer, you become an engineer, you generate profit already, you put into your trading, from there you grow your money. Don't forget, the key point is we are going to grow our wealth, meaning you are going to accumulate your wealth. Now, one thing that many of us or many of the advertisement lead you to the wrong direction about passive income. We strongly disagree about this passive income. Even passive, the word itself, even the income itself is a misleading direction. Now, why income? Income and wealth, they are different. Please separate this part. Now, income itself, mainly when you generate income, you're expecting expenses. You take your income, then you go and pay this bill. But when you are growing your wealth, whatever you generated, you're going to add on. You're not going to use it. You're going to add on, because compounding is important. Please get these statements right. So the passive income, this term, for me, I don't really agree. Totally out. We really do not know since when these terms started to being used in the industry. But passive income is not the correct direction to go with, because the term's income is not the correct definition. Passive also not correct. Passive, many of us thought that we don't do anything, we're generating the income. But do you know that when you are growing your wealth or you're accumulating your wealth, actually many things that we need to do. There's a lot of hard works that we still need to put in. For example, before you're selecting a stocks, before you rebalance, before you allocate, to decide what kind of asset allocation that you're going to go with, before you rebalancing your portfolio. There are so many things year in, year out, or day in, day out we need to do. So get the concept correct. And the most important statements or ideas that I wanted to transfer to you is, you ask yourself, do you really need to become a full-time trader or not? Since we have so many ways of accumulating our wealth, do we really need to become a full-time traders or not? So I hope that today's topics really open your mind to rethink about this path itself. And before the end of my session, please remember to give us a thumbs up, and please remember to subscribe to our YouTube channels and on your notification bell so that you will be informed when we release our next video. My name is Ting Ting. I'm going to see you in our next video. Bye bye.